If you have been tracking the market for the past few days, you're probably wondering what exactly is wrong with the market. The market's been in a solid range for the past few days. So let's analyze the market technically and see what's in store in the coming weeks, the days, and the months. So let's analyze this further, and to do that, I want to point attention to the monthly time frames. So as you can see, this is the monthly time frame. Let me just zoom out a little bit so it gives you a better picture. Now, if you look back in history, the market has been trending in an upward trend since 2009. I would say 2010 would be a good time frame. So it's been above the purple, which is the 20 period moving average line around that time, and it's been moving upwards ever since. So the market's moved up significantly in the past few years, especially after the COVID downturn or the 2020 crash. And it's been moving up in a strong bull market. Now, the market's actually done pretty well in holding its ground. The market would never, it kind of went through a period in October, November where it was over bought, and you could call it like it's been inflated or it's been into a super bull market or a hyper bull market, and it never remains there forever, and that's where it kind of like crashed down. And that's expected in any market cycle. Like the market cycles do trend to move up and move down, and that's what we've seen so far. So now looking at what we've seen, where is the market headed? Now, if you look back in history, like you could see like the market does tend to hold its ground on either the 20 period moving average line or the 50 period moving average line. So in this case, the market has taken a breather on the 20 period moving average line as it's done right now, which is expected. Now the market has been holding its ground. So the range that the market is holding its ground on is the 41 20, 41 10, and that's where it's been hovering. Now if you look at today, the market did break below it around the 40.70 mark, but then again bounced back since then. So that's the pattern where it's trending, it's heading towards. So if you are a long-term trader, now when I say a long-term trader, you trade monthly charts. You trade buy today and then probably sell in a few months. That's your time frame. Now if you are that kind of a time frame, you could use this potential opportunity to buy and keep a stop loss just around the 40-50 mark. So that's kind of where I would set my boundary or my stop loss, so that in case if it trends lower, that's where it's going to be headed. Now this is just only and only if you are a super long-term trader and you can wait for a few months before you could decide on, is it time to sell the market, or can I just like average up, never average down, but average up and buy more into the market. So that's just my suggestion for you if you're a long-term trader. Now let's look at the weekly market. So the weekly market is in no man's land right now. So it's neither up, it's neither down. It's kind of like in the middle of nowhere. And markets tend to not be or do not like to be in the middle of nowhere. It likes to move in one direction, either up or either down. So it is kind of like in this weird pattern right now, but to actually identify what's wrong, why is the market just stand still at this time, the weekly won't tell you what's happening. So in order to look and identify, troubleshoot what the issue is, you look at the daily, and that's where you can get a better picture. So what the daily is telling you is, and this is just me zooming into the daily chart for the S&P 500, the daily tells me that, okay, it's actually finding a good solid resistance by this the purple 50 period moving average line. So that's forming the upward resistance, but it also has a support, which is the 20 period moving average line. So that's where it's hovering between, it's oscillating between the top and the bottom, the top, the bottom, the top, the bottom, and now it's again like trying to decide where it has to go next. Now, if you look back in history, not too far ago, it's just like in April to the May period, you will see that the market did something very similar. It just oscillated up and down, up and down. But something actually struck it that caused it to move lower. So what happened was the market touched the 20 period moving average line. It saw that it could not move higher anymore since then because that was like a strong resistance. And it's also a trend line. You could call it a trend line. You could call it the 20 period moving average resistance. And it just collapsed. It collapsed down. Now, in this case, it has an upward resistance and it has a lower support because this particular resistance has now become support, and it's kind of like holding it between in safe hands. Like it's like, a baby between two palms and you're caressing it, supporting it, making sure it's protected. That's what's happening right now. So your question would be now, where is this headed? Like what's going to happen next? So my educated guess on like me studying the markets would tell you is if the market breaks above this 20 period moving the 50 period moving average line, the market would tend to move towards the 200 period moving, which is the blue line that you see on the screen. So that's the direction that's heading. If it breaks below the 20 period moving average line, it may have a tendency to move towards the 38.95. But I do feel that there is a stronger support at moving for it to move lower. And the reason why I say support, I mean to say is that this big massive support line on the monthly chart is holding its ground. So this support is going to protect it from moving lower. And that's why I said the long-term investors, like this is a good time to enter in because you could see some good uptrends if the market's heading lower. But keep your stop losses. I'm not giving you a guarantee that this is a good solid buy. I'm just saying keep your stop losses because in case if it goes lower, you don't lose a lot of money. So if you are a daily time trader, so this is a daily time frame. So when I say daily is that you decide to buy now and maybe keep it for a few days. So say anywhere between a 2-day or maybe a 1-day to a 3-day time period, or maybe for the entire week, you would possibly have this range to trade in. And as this breaks through this range, you would then either sell as it heads lower or you would buy as it breaks above this 50 period moving average line. So that's where, I would say hold tight if you're a shorter term trader. Let the market tell you where it's going to move. If it moves higher, then that's a good time to buy because there could be more buying potential to come in the days to come. If it moves lower, then it could, get your shorting game ready because that's where the market could trend lower as well. So my recommendation is just hold and like stay on the sidelines as it breaks this pattern. If you're a weekly doesn't tell you too much right now. If you're a monthly trader, this is a good time to buy. So that's just my 2 cents. I hope this was helpful. I hope this gives you some insights into, different perspectives of where the market's heading, and it makes you or helps you make an informed decision in the days to come. So with that, do stay tuned for another video. I'll try my best to post more videos to give you more insights as the market trends and changes direction in the days to come. But also in the comments, do let me know, do you want me to cover any particular stock for you and analyze it further? So do let me know and I'll be happy to do so. So with that, stay tuned for another video and I'll see you soon.